Hey everybody, Boris. Welcome to our weekly technicals for the majors for Euro dollar, dollar yen, pound dollar for March 23rd, 2018. And the focus this week is certainly going to be the FOMC meeting on Wednesday. That's the big event. That's why the dollar is starting to get a little bit in front of it. And that's really going to be the key trigger for whether we're going to have any kind of a dollar rebound or not. As far as the levels go, we've seen a little bit of a slippage in the euro. The euro's kind of come down to the 23 level. So we still stay at this 22, 24 level on the euro, but clearly much more biased to the downside. And 22 could be the big test this week if we're getting kind of a dollar rally. On the other hand, the 105 still held. I'm going to show you the weekly charts. You're going to see that the 105 still very much holds as a support level. But this 107 has been very stiff resistance. And we really, to establish a genuine breakout in the dollar, we need to close out above 107.50 by the end of next week. And that's going to be a key tell of whether we have finally some sort of a sustainable dollar rally or not. And the pound is really going to be caught between a rock and a hard place at this point. A lot of idiosyncratic risk. We have the BOE on tap as well. But it's unclear whether they're going to be hawkish. We have data including wages and CPI coming out next week as well. It's unclear what the situation is on Brexit. It still looks very muddy, especially on the Irish situation. So cable just seems to be very much trapped. This week we saw a lot of sellers in front of the 140 level, and that's going to be a very key tell of whether cable can muster any kind of rally is if the 140 can get taken out. Frankly, most of the trade this week is really going to be pro-anti-dollar in a lot of ways. It's not going to be contingent so much on the individual stories of the euro or the pound, perhaps a little bit on the yen. In the yen, we have one side story that could scuttle the whole dollar-yen rally, which is the looming corruption saga in the Japanese government of the Prime Minister Abe, about faking some names on a land sale deal that was a sweetheart deal. It really feels like he's going to sacrifice some of his pawns, perhaps his finance minister Aso, for it. But it doesn't look like it's going to topple his government. But if it does, it certainly could have an impact on the yen, simply because Abe has been one of the longest serving prime ministers and one of the most effective ones, irrespective of whatever his political leanings are. So a corruption scandal could certainly topple him and create a little bit of volatility in dollar yen. But if he can sustain that, it really becomes the focus back to the dollar, and then we could have a significant rally through the 107s if the Fed remains hawkish. As far as the calendar goes, as I said, 3 central bank decisions this week. We have the Fed, RBNZ, and the BOE. Those are going to be critical. And in addition to that, of course, we have the UK CPI data and the PPI data all on Tuesday. Then after that, UK labor data, which is going to be very important. We're actually bullish this particular data set because manufacturing, service, and construction sectors all had strong job growth. So there's potential here that we could have stronger wage growth, which would obviously set up for a better tone in cable. If this fails, though, it's going to be hard to see how cable could rally against the backdrop of kind of lackluster data. On the U.S. side, aside from the FOMC, we have nothing more, I believe. Let me just see. Durables and home sales. I mean, all second-tier data. It's really going to pivot on this Wednesday data set. In the UK side, in addition to the CPI and the claimant count and the BOE, we also have retail sales. All of that gives us very good inkling as to the state of the UK economy, which looks a little wobbly at this point, and certainly going to be worth watching. And finally, on the European side, the key question on the European side is, has the boom kind of tapered off? We'll have the flash PMI data out of Europe. We'll have the IFO data. Both of those are well above their boom-bust levels, but that's not the question. The question is, are they coming off the highs? And if they continue to come off the highs, that could be a little bit of an ominous sign for the euro. Euro looks vulnerable to me, and any kind of negative data out of the Eurozone could be the tipping point to help us push it a little lower. So let's take a look at the charts here and just see how everything sets up. So Europe, this is the weekly charts, and I brought up the weekly charts because I think it's important to see the amount of distribution we're seeing over the last month and a half around this 24, 25 level, and it really almost twin shooting star candles. Very unusual formation. I haven't seen this kind of formation in a long time, where you have twin shooting star candles, which really augur poorly for an upside here. They really suggest that they'll break below the 23s, 2350. If we take out 2350s, into the start of the week, it really looks like we could take out the 22s, maybe even go to 2150 on a test of the euro to the downside. Certainly the pressure and a technical look here looks to be much more to the downside than to the upside, as the top side failed with a lower high, as a matter of fact, even, and the shooting stars have replicated themselves. So looking for the euro to get weaker as the week starts out, and perhaps even tumble all the way down to the 22s ahead of the FOMC, with the FOMC maybe even pushing it even lower if it comes out to be hawkish. Cable not nearly as bearish as the euro, but in this very, very tight kind of a low volatility compression triangle. This type of triangle is very indicative of the market being uncertain about direction, and a break here. So in other words, if we sort of break down towards the 37s on a long candle to the downside, or break up above the 40s, either way would give us a strong signal in a direction for future moves. So we're in this volatility compression move right now, and just simply waiting for kind of directionality out of cable. It's the least, it's the most inscrutable of all. And yen, although it does not look great into the end of the week, it's coming down into a red candle. If you look at a bigger picture, the lows still hold, and that's the most important thing. The most important thing when you're looking at technicals is, are the lows holding, are the highs holding? Everything else is kind of just commentary. It's just a tug of war that doesn't mean much. So as long as we hold the 105.30s, the lows here, the move here could, and as a matter of fact, even the lows here were higher lows. So although the candle is red, it's ultimately actually a more bullish formation than it is a bearish one. So certainly next week, you do want to see the 107 taken out. If we get 107 taken out on a closing daily basis, that would be very, very bullish. And if we, at the end of the week, if I'm talking to you next week and we're trading, 107.75, 108, that would be a very bullish construct, because that would basically show that we have gone through the consolidation process and now perhaps are ready to stage a more meaningful rally towards the 110s. That, of course, depends a lot on how the FOMC goes, how the market reads everything else, and whether the price action is going to confirm the tougher, more hawkish fundamental stance of the Fed. It is going to be very interesting to see, but until we get the price confirmation, I think you can't make a bet one way or the other as to how the dollar goes. The only thing you can say right now is we've held the lows, so buying here with the stop underneath the lows gives you a relatively low risk bet on the possibility of a further updrift. And the same thing with the euro. We haven't fully broken down, but the fact that we have two shooting stars here with a lower high suggests that the move to the downside is worthwhile taking, especially since you have the stops very clearly defined around the 2450s here as we go forward. So that's how the week shapes up. It looks to be a sign of a pro-dollar move, but until the market gives us some kind of confirmation on the price, you can't be 100% certain, so trade carefully. Wish you guys the best luck, the best trading. Boris, over and out.